This man is an investing legend. His strategy generated an eye-watering 3,600% return during the COVID crash. He's a risk management superstar, and recently he changed his tune on Bitcoin. Why did Nassim Taleb go from Bitcoin bull to crypto crybaby? Let's dig into his thesis that argues Bitcoin is worth zero, and even worse than that, only zero. First off, I'm bullish on crypto, and I'm in conversations with investors regularly. In these discussions, it's almost assumed cryptocurrency will be a part of the world's economic fabric from here on out. Modern-day philosopher Nassim Taleb has a much better imagination than me, apparently. He recently graced us with 6 pages of math equations and history lessons to convince us that Bitcoin, in his opinion, is worth exactly zero. Let's look at the more interesting, crazy, ludicrous, and explosive things in the Nassim Taleb Bitcoin black paper. Before you drop off thinking he's just another anti-crypto FUD spreader, historically, he's been very critical of the current monetary system, but a strong proponent of crypto. Even quoted as saying, Bitcoin is an excellent idea, as well as owning BTC himself. So what gives with his about face? Let's start with his big statement, the one that got all of our attention, his claim that Bitcoin is worth zero. He gets there using an asset pricing model. This is because he doesn't think Bitcoin is a currency and that it can't be assessed through the lens of a currency. I'll expand on that one in just a minute, but for an asset to have no dividends, no buybacks, and no reverse dilution potential, Taleb says there's a chance that the asset will drop to zero. And then in one giant Superman style leap, he goes on to tell us that if it could drop to zero, then today, here and now, it must also be worth zero. So what's he smoking? I counter with, well, isn't it true for fine art or for gold? Taleb says because people will always be willing to assign a certain amount of value for those items, even just a penny for a Picasso. If you can even imagine that, a Picasso painting being worth a penny, then you think it can't be worth zero, or a penny for a gold chain. That's what Taleb is saying, but who really sees Bitcoin falling to below the value of a penny again? I certainly don't. And even if it does, I'm one of those ones who will assign value to it, and I'll buy as much Bitcoin as I can for a penny each and just hodl it. Gold wasn't selected as a store of wealth. It's used as a currency, and it requires no maintenance, and it does have thousands of years of proven use. But we live in a brave new world with fast-moving innovation and lightning-quick adoption curves. So can enough people get on board to believe that Bitcoin will become a store of wealth? Sure. How quickly will they? I think that's the open question. When? Not if. He goes on to say gold and silver can't be displaced by new technology. Bitcoin can. I would argue that is what's currently happening. Gold and silver are being displaced by a more accessible commodity, that of Bitcoin. To his second point, could Bitcoin be displaced by new technology? Absolutely, but it will experience the adoption curve first. Then we'll segue into the newer, much improved coin that probably already exists within the crypto sphere. Ethereum? An internet outage on some massive unforeseen scale could affect Bitcoin in unpredictable ways. But that same outage would also affect the markets, the financial system as a whole. You have banks, exchanges, grocery stores. That's a macro existential risk. And if there was a widespread, prolonged internet outage, most of us would be concerned with things other than Bitcoin. So to me, that feels like a moot point. And closing out his trashing of Bitcoin as an asset, Taleb goes on to say that Bitcoin has no valuation model and is a bigger bubble than the dot-com bubble, because at least companies at that time were promising future revenue, something that Taleb thinks Bitcoin and crypto at large can't do. Those are the points he made about Bitcoin as an asset that I thought you should hear. Worth zero, replaceable by new technology, different from gold, susceptible to an internet outage, and no revenue generation potential. What do you think of these arguments against crypto? Make your case in the comments below and let's have a discussion about it. The other half of the Bitcoin black paper goes after Bitcoin as a currency. It's not the trite too volatile argument, though he does harp on that. He does make some well thought out arguments, just most of which are wrong. I think his best point is centered on the volatility of Bitcoin and the fact that it's usually pegged to a fiat currency even when it can be used at a retailer. Yes, Bitcoin and all of crypto is volatile. Nobody in their right mind will argue that. We've actually seen that volatility easing in the last month, and I think it will continue to do so as the market matures. There are more people holding onto coins for longer, and as that volatility diminishes, it'll naturally shake out the more speculative and leveraged traders because it'll be less profitable for them to do so. On the latter point of being pegged to a fiat currency at the retailer, that is correct. Think about a coffee shop that accepts Bitcoin. They'll typically price a cup of coffee at $3 or $3 worth of Bitcoin. Again, that's due to the fluctuations in BTC for both them and the consumer. As the volatility wanes, there will be more retailers comfortable pricing specifically in BTC. He also points out that the less than perfect speed of Bitcoin transactions as a reason the coin can't become a full-fledged currency. Yes, the transaction speed is variable. It can take anywhere from a few seconds and up to an hour. There are a number of variables that affect this timing, but we won't get into that in this video. But my counter to Nassim is asking, how long does it take a credit card transaction to settle? Yes, the merchant receives confirmation that the payment will be good almost instantly, but it goes through middlemen like Visa, Square, and banking institutions. All of them like to hang on to that money for just a little bit so they can make interest off of it. That merchant can wait 24 to 72 hours. That's 1 to 3 business days. Bitcoin settles within 60 minutes, 7 days a week. Certainly sounds a lot quicker than the current process. One area of acknowledgement is that he thinks there's a need for a currency that isn't backed by a government. Taleb isn't backing down from that notion. He's one of the original champions of that concept. And I think all of us are in agreement on this point. Taleb says that it just can't be as volatile as today's cryptos. Perhaps the comments I found the most concerning or interesting or explosive, Taleb's take on the Hodlers. He said, Hodlers are a cartel who attempt to hoard the supply of what they hope will be a future currency, with a plan of having the mass of humanity going to these hodlers in 10 or 20 years' time, paying high prices for crypto just to have access to this new standard of currency. Taleb asked, is that really a better scenario than a fiat banking system where most of the workers earn middle-class wages? Now, I think that is an interesting point, but the simple rebuttal is the BTC and all of crypto is being invested in and hodled by those that see the value before others do. It's not dissimilar to people investing in a speculative asset or a product or purchasing property in an economically depressed area if you think its value proposition is going to change because you'd read about, say, a highway that's going to be built nearby. From Taleb's perspective, Bitcoin has no utility yet. But that explosive growth of the Bitcoin price is luring in people who cheer its success as a currency before any evidence of it being a functional currency. And these verbal prognosticators are just trying to use their platform to hype crypto and generate profits at the expense of the little guys who enter the trade late. Taleb's reasons against Bitcoin as a currency are volatility, inability to price items in its native form, transaction speed, and the big bad cartel. Add those to his arguments that it's not an asset, and we're at 10 points he's made. I left out another 10 arguments from his paper. I left them out because they were even weaker, and I don't think they need to be rebutted.